Okay, welcome everyone. I'm going to go ahead and get an early video out. We'll just go through the stock market. We're looking for trade ideas. We're going to use the charts to be our guide, and we're going to just get right into it. So if you guys are new and you're finding value in the content, drop me a thumbs up. If you've been with me for a while and you're finding value, give me a thumbs up. Let me know how I'm doing. Let me know how I could improve. Appreciate it, and we'll get right into it. Triple Qs, guys. We're starting off with the tech sector. One, it is the heaviest weighted sector in the market. So we always want to see where the heavy hitters in the market, what they're looking to do. Also, this year, tech has pretty much been where the strength has been at. So we want to look for, market direction around the strength and the market leaders there. Okay, so on Triple Qs today, and obviously I saw in the pre-market, they were kind of gapping us up. We'll look at the futures here in a second, but Triple Qs, we're still sitting right there at that 318 trend line. Really, if you roll out to the daily, you can see it. It's pretty obvious that we're still range bound, and they pop things to the top side of the range. It sells off. They break it down. They buy it back up until we have a definitive, definitive and impulsive reaction at the key levels. We're still range bound. So you can see here we basically have just been really trading within this range. Today they gapped it up and sold it right back down. So we're trading right at that level. Okay, now what does that mean? Do they rally it here? Do the buyers step in and they can hold this level and this is now the new support and we're going to start to rally from here? That's possible. So if we see that, we'll definitely need to take note of that. As of right now, I still see it within the range, and we're just we're kind of just trading around that 318 level. We still have the negative divergence on the daily chart. That divergence has been confirmed. Okay, so there's no indication that this divergence is not going to play out. And I've talked about how all the past divergences, at least for the last couple of years, have all played out for pretty good sized drops. And so I don't see any change there. Now let's look at the futures, NASDAQ futures here. Flip on over to this one. And you can see on this, here's the hourly chart. And here's what they did. They basically, in the overnight session, they kind of rallied it up. They opened the market right up here, which makes sense because a lot of the time, if you're going to get a move in the pre-market, they're at least going to open the market, kind of above a key level and then see what the market wants to do. Sure enough, the heavy hitters, the major players who have large positions, they saw that market open high and they just sold right into it. All right, and that's what's continuing to happen. Basically, when we hit this resistance level here, you can see the futures are a lot cleaner. You can see we've got a key level. It's really right in here. They gap, there's another reaction. There's another one. There's another one. Lots of reactions. Obviously, the market's just in a holding pattern. It's pretty obvious that like I said, the upside's limited, and I've talked about that for the last couple of weeks. And sure enough, you roll out and look at the futures, the upside has been limited. Okay, and today, they ramped it up and boom, right back below. So again, just a false breakout basically, and that breakout occurred on this hourly chart with negative divergence. That was a divergent high that got sold right into, and that's what I talk about. The divergences oftentimes, if you see a breakout that occurs with divergence, it's very likely, high probability, that it's going to get sold into and it's going to be a false breakout. All right, there's no guarantees, obviously, that'll happen, but the probability is elevated, and that's the best we can do in trading is trade when the probability is in our favor. So there's that false breakout. I would suspect we're probably heading down to the bottom of the range now. We've definitely, last week, we definitely tested the top of the range several times, broke out today, failed, and I would suspect we're going to head down to the bottom of the range. The dip buyers are here right now trying to hold this level, and what the bulls want to see, really there's nothing to see here on the futures, but on the Triple Qs there's kind of something you could look at, but the bulls want to see this ramp back above that level and start moving up back towards those highs, maybe take out those highs. That would be very bullish. So we'll keep an eye on that. Obviously, there's possibility that happens. And then the bears, what we see, and again, I'm in the bear camp, I see a false breakout that occurred with negative divergence. I see confirmed divergence there on the hourly chart. And I see us very likely heading back down to the bottom of the range, which is that's about 12,975. You can see looking right there, we've had a couple reactions down there. So I think we're heading back down there. Now, when we get down there, that's where the bulls are going to be at, because, again, we've been in this range. That's where the battleground is at. But, again, I think we're going to break. I don't know exactly when, but I do think the bottom of this range is going to give way, and we're going to start to roll over. Okay, and then just flipping back to the future, or back to the triple Qs. All right, so, that's the breakout, and then, again, we're kind of back in the range. So I'm thinking we're heading back down to the bottom. It's about 313.50, 313, anywhere right in there is because it's such a well-defined range, you can't really hold that range to the penny. You should expect little false breakdowns and false breakouts. Okay, and like we had a false breakdown there, false breakout here. You should expect that because the range is so defined that they're going to play games, the market makers and hedge funds and large institutions. They take, they're trading around those levels and they know where those levels are at. People set stops above and below those levels. So, all right, that's pretty much all I have on the NASDAQ and the NASDAQ futures. SPY, again, SPY's not as interesting to me right now because I think most of the price action has been in triple Qs, just kind of grinding higher. This was your last divergent high right here on the SPY. These kind of candles right up in here. We broke this upward trend there, and we've just kind of been back testing, and there's just nothing else going on really. So whether they ramp it up and make a new high and put in another divergent high, that's completely possible. The upside's limited though, because if triple Q starts to roll over, SPY's not going anywhere. It's just the nature of the weighting of the market, of the stocks that are in there, such as Apple. Let's look at that one. You can see these FANGs, these large cap tech stocks, they're not going anywhere. They're done. They haven't gone up. All right. We hit this level right here. I talked about this. I've been talking about this for a few weeks, and this is pretty common for a topping pattern, to maybe be talking about it for a few weeks. Usually you're not going to see something hit a top and then just completely reverse and crash. The way it typically works is you're going to kind of hit a top, build, form a top, suck in a lot of bulls, and then roll over. And that's what I'm seeing right now. So again, there's your bear market in Apple. We've hit that trend line, and sure enough, we hit it again. And look at what happened today. They kind of tried to get above and rejected. We're still just right there at that trend line. So until something technically changes on that, it's not going to change the triple Qs. The triple Qs is not going to break out if Apple's stuck at resistance. And that's what I've been talking about, is I believe the upside is limited. The upside's not completely contained. Like today we kind of popped up a little bit. Doesn't mean we can't do stuff like that, but it would likely get sold into. And I talked about, divergent highs are likely going to be sold into at or near this level. The upside is limited. And again, I think the longs or the bulls in this area are going to end up being the bag holders because I believe Apple's got to move like this. So people that are long really over the last month or so, yeah, they caught a little upside here, maybe caught a little there. But if they're going to stay long, I think they're going to, regret that as we roll over. We'll find out. I obviously could be wrong. Very possible. Let's go to Amazon. Amazon, resistance. There's the level. I talked about it over and over for the last couple weeks. It's about 103.40 or so. All right, rejected there. Hit it again. Today they popped it above, rejected. All right, we just keep getting rejected at resistance. So until that gets taken out, no technical change. We're just at resistance, and we're likely going to roll over. Google's been one of the stronger stocks, but recently, the last couple of days, they've been selling Google. And you can see down a little bit today. It was down a little bit on Monday. And it's getting sold into, has that divergent high. All right, you can see there's the negative divergence. So that's a divergent high. That's a divergent high. So we now have that negative divergence on the daily chart. We didn't have that before. We never had it right here because we didn't make a new high in price. You had a former high right here, but we didn't make a new high right there, even though momentum was lower. So was price. So no divergence there. But over the last couple weeks, they popped it up above that previous high, made a new high here and a new high here on lower momentum. That's negative divergence. So we now have negative divergence on Google. And one development to note, if I look at the PPO, is we've got the bearish PPO crossover on that, confirming that negative divergence now as well. So that's new. This was one of the stronger tech stocks, large cap tech stocks recently, and it's now has the same bearish weakness showing as the rest. So yeah, that's a new development there. And then we'll look at Microsoft. Again, Microsoft, it's gone nowhere, really since, for the last while. And really, even if you go all the way back to, this is March 17th, I mean, it's up 1.5% or so since March 17th. So over a month, and it's up 1.5%. The upside is limited, all right? The math speaks for itself. And we are, again, it's just kind of spiking up, getting sold into, putting in divergence. Each little spike higher is a divergent high. And there's your negative divergence on the daily. There's your confirmation with the bearish PPO crossover, a bearish setup. And I believe this is going to roll over. And the one thing is, these things are getting close enough now to earnings. Earnings, I believe, are coming out in either a week or two. Let's see. It looks like next week is the earnings. So maybe the selling starts ahead of earnings. They might start selling into the earnings, but I don't expect a whole lot of movement, although it's possible, but I'm just not expecting a whole lot of movement in these until earnings. The market's likely going to just want to kind of hang out and wait for the earnings. And the way these charts are all set up tells me that earnings are going to come out negative and bearish. All right, so that's the best I can bet on that one. Tesla, all right? Tesla's gone nowhere. Resistance right there, 186, 180. It's about 187, and again, it's just literally gone nowhere, all right? So for all the people commenting on my channel about how bullish and how everything looks so bullish, and what happens in these suck-in moves, these bull traps, is the market will open in the first half hour, ramp up, and everybody's extremely bullish, and boom, and then it just sells off and fails and rolls over. It doesn't really completely crash, so the bulls don't get out who bought into that ramp up. They kind of hold on to it, but it's not going anywhere. And then it does it again the next day, sucks in some more bulls, and then rolls over and doesn't crash, so the bulls don't get out. And then eventually, the way that I'm reading it is, maybe on earnings, we're going to get a big gap down, and it's going to trap the bulls in losses, not giving them an opportunity to get out with their, without taking losses. That's kind of the nature of how these moves typically work. So that's what I'm really looking for. So we're just kind of treading water right now. NVIDIA. So yeah, I mean, obviously NVIDIA gapped up today, and it feels really bullish because it's up 3%. And, at face value, a gap up is bullish for sure when you gap up 3%. But we've really gone nowhere. I mean, look, we broke back here on April 4th. For the last few weeks, we're basically at the same levels we're at. We gap down, we move up, we come down, we move up. We're just treading water, all right? So, we popped up today and made a new high, and that's a divergent high. All right, that move up today on the gap up was a new higher high in price, and yet momentum is clearly dropping off. So divergent highs have a high probability of getting sold into, and so far that's what it looks like. They're kind of selling into it, and I suspect that they will continue to sell into it, and that's what I'm looking at. And then as such, SOX, which is the Semiconductor ETF. This one's just kind of holding support. So you've got the trend line on the daily chart going back to October 13th or so. And you've got support, and just kind of holding support. So that trend line has not been violated yet and broken. The negative divergence on the daily chart with the confirmed bearish crossover tells me that sooner rather than later, this trend line is going to give way. I suspect it's going to give way in a kind of a major way. And all this topping action right up here, I have a feeling is going to get trapped. So I think they'll probably gap this thing down to around 399 or 400, gap it down, maybe give a little rally, but ultimately just roll over and start to sell down. That's kind of the level I would think they'll gap it down to, because that would trap all this bullish money. And yeah, that's what I'm anticipating. The chart tells me that's likely to happen. Gold, this is gold futures. Again, I have an uptrend line that I think broke, and so far we've seen some selling after that. I kind of have mixed feelings about gold right now, and I'm not extremely bearish on it. I'm not extremely bullish. I can see some more downside, maybe in the miners. looking at GDX, I've got this trend line here, kind of a bearish rising wedge, and it broke, and I talked about it. Here's the hourly chart, how it was kind of flagging, and there's the gap down, and so again, I think we're probably heading down to this level about 33.40. That's your former high. Let me go back to the daily chart. That's your former high right there, reaction high. So it's pretty clean to get down there, 33.40 or so. Probably get a bounce down there. You break that, you could head down to this level about 30.75 or so. I don't know if there's more downside from there. I kind of have mixed feelings on it. So, I'm not really shorting this thing right now. I'm just kind of going to let it probably do its thing. I'm more interested in the tech sector. Commodities, Joe. So Joe's coming into some resistance right about now. I would expect probably a pullback, some sort of a pullback. But again, this one to me looks like buy the dip. So, whether you're going to short it or not, that's the active trading stuff. It's more buy the dip if you're looking for a swing trade, at least from my perspective. And yeah, resistance is right there at about 58.70. You can see lots of reactions right in that area. Big gap down right there. So maybe we get a little pullback. Maybe not. Sometimes when this thing wants to run, it will just run. And you always want to align it with the futures if you can. Here's coffee futures. Coffee futures. I don't have this one marked up. I think you've got, kind of the resistance looks to me to be right about in this area right here. So maybe a little more upside there on the coffee futures. And yeah, so, I don't know. Again, I'm not looking to short it. It's probably more buy the dip. Looks like it's running though. And again, Joe, if I go back to that one, the original buy zone was right down here. It was a beautiful buy zone. I had it marked out as a buy zone from way in the past, and it was just beautiful, basically. This thing's up from that buy zone 45%. Again, another buy zone right there. Another kind of react level of support. It's up, 18, 19% from there. And I think we're likely going to continue to run. I mean, this is commodities going up. And if you haven't noticed, I've definitely noticed where I live at that gas has gone up about 70 cents in a matter of a week, it seems like. I know I just flew out and flew back in, and I noticed it was up about 20 cents more just over the weekend. So that's gasoline going up, and that's going to continue to spike that CPI, which keeps the Fed in hawkish mode. They might not hike as much as they as they have as quickly, because I think they're getting to the point where they keep hiking, they just break everything. But they're not going to ease, and the market needs easing in order to validate the prices up higher. All right, so, and then we go down to wheat. We'll look at wheat real quick. Bullish falling wedge, guys. It just continues to be in this nice bullish falling wedge. All right, we haven't made our money quite yet, but that's okay. We're getting positioned for when the move shows up. All right, I don't want to be chasing wheat when it breaks out and it's running, and you hear on TV, oh, buy wheat, it's great. I don't want to buy it up 20%. I want to buy it down here at where the downside is limited, likely limited, of course, no guarantees. I want to be buying it where the smart money's buying it, where there's, opportunity is down here, all right? And so, again, that's a nice bullish divergence on the daily chart, on the RSI and the PPO. Bullish falling wedge. Again, we keep hitting this wedge, and they buy it. Boom. You make a new low, and they buy it, all right? The downside is limited. So eventually, I believe we'll break out. The next major buy signal would be a breakout of the wedge, and then that should set us up, all right? And then the target, I think you take the widest part of the wedge. It's about right in here, and it sends us up to, above these highs, basically. It's going to get us up in this range, $10 or so. So that is what we're looking for in wheat, and I still like it long. Okay, LLY is backtesting resistance. Here's the thing, it's definitely a key level, but there's something I don't like about the chart. So look, you've got some reactions right here. Not a ton of reactions, to be honest. I'm not really in love with this trend line. I got a couple right in here, and there's the backtest. So I think we'll say it's enough to say it's a trend line. It's just could be better. And it did rally right into that trend line. So I guess we'll say that's another reaction. All right, we've rallied into that trend line resistance, And it did, when it did that, it made a new high in price just above that former high, just kind of barely popped above it. However, I'm not seeing divergence in the momentum, at least not yet. Okay, so you can see here your former high was, you know, roughly in here, and we're making we pretty much kind of made slightly higher momentum on the PPO and higher momentum on the RSI. So I don't have that negative divergence that I really look for. I do have that, you know, run into resistance, but I don't have that divergence. Maybe what's going to happen is we're going to grind around here like this and kind of put in, you know, grind around, put in that negative divergence up in this area. And once I start to see that, then we'll start to, you know, then we'll start to have a much better setup for a short trade. So that's it on that one. Okay, so just to wrap up, I'll go back to the NASDAQ futures. Again, back within the range, guys. That's the biggest, that's really the only development. We're back in this choppy range. Top end is about 318-ish. Bottom end's about 313-ish. And we're just back in that range right now. So yeah, today they'll probably run it back up to that kind of resistance level and then run it down. And again, when I say 318, 313, I'm talking about triple Qs. This is the futures. The top end of this is about 13,210, and then the bottom end is roughly 12,977. So yeah, they probably run it, hit resistance again, and then continue to work our way down to the lower end of the range. All right, maybe sometime this week. If you guys are finding value and you're interested in learning this as a skill set, take my technical analysis course, multiple videos put together along with a checklist, priced affordable, link in the description below. If you're interested in getting additional trade ideas, additional market insights, additional commentary from me throughout the day, join the private member group, $5 a month. You can quit anytime you want. No obligations, no guarantees either, guys. I can't guarantee I'm going to give you winning trades all the time, but again, I do work at it. So join up. Link in the description below for the member group. Link in the description below for the course. Both provide a lot of value. Check those out if interested, and I will catch you guys tomorrow.